Hey, welcome back to YT Finance, and today we are talking about Senseonics SENS stock because they recently announced a collaboration with the University Hospital's Accountable Care Organization, which is great news. We will also address how amazing SENS stock is compared to other stocks on the market, and we will conclude with an SENS stock catalyst that could move the stock positively. Then lastly, we will conclude with the ideal price point to buy Senseonics shares at. Go and press the like button right now for more stock news updates. Comment when you think Senseonics will gain FDA approval. Turn on all subscription notifications to stay informed. And now let's get right into today's stories. Senseonics is a medical technology company that developed the first long-term implantable glucose monitoring system for people with diabetes. Senseonics recently announced that the University Hospital's Accountable Care Organization, also known as the UHACO, has begun to offer Senseonics Eversense glucose monitoring system to its Medicare enrollees, which is huge news for Senseonics. Patients will be eligible for this as long as they have type 1 or type 2 diabetes on insulin. The head of endocrinology and diabetes at UHACO had this to say, and I quote, "We are excited to offer Eversense to our ACO patients with diabetes. Supplying tools for effective glucose management allows us to meet the standards of care for patients using insulin as outlined by the American Diabetes Association." Eversense offers patients choice amongst continuous glucose monitoring devices. The Eversense CGM system delivers industry-leading accuracy, an improved patient experience, and an array of unique features that afford people, especially those in the Medicare population, the opportunity to achieve improved health outcomes. This is fantastic news because now Senseonics has more exposure, especially to the Medicare system, which should lead to sales and revenue generation for the company. We also have to remember that this system is the best CGM that is currently offered on the market thanks to its smart transmitter that comes with on-body vibration alerts that go off when the glucose is either too high or too low. Plus, this can be removed, recharged, and reattached to the skin for ease of access. The Eversense system also is the clear leader when it comes to how long the device can be utilized by a patient, which can either be for 90 days or 180 days depending on the type of system, which is around 4 times longer than any other CGM on the market. Overall, the SENS stock price has been doing great lately with multiple pre-market rallies. Currently, the SENS stock price trades around $3.83, but the stock's short-term technical score is over 69%, which means that SENS has traded more positively than 69% of all other stocks on the market within the last month. When we look at Senseonics' specific industry, which is the diagnostics and research industry, SENS ranks better than 81% of all other stocks in that industry. Analysts have an SENS stock price target currently which is at $4.13 on average, with the most bullish SENS stock price prediction that I could find being $6 per share. Senseonics also has a long-term technical score of 81, which means that over the last 200 trading days, the SENS stock has traded more bullishly than 81% of the entire market. And for their long-term technical score according to their specific industry, SENS ranks higher than 80% of stocks. So this is great news, and these are really good stats. It looks like Senseonics as a company and their SENS stock are doing very well. However, we cannot take these past histories of their performance and dictate what their future performance is going to be, which is why we are going to look at their future projections for the stock price and their revenues so we can get a better gauge on where this stock is headed. Another Senseonics catalyst that is literally coming up tomorrow was announced recently that they're going to be attending and speaking in the upcoming virtual H.C. Wainwright Global Investment Conference. Senseonics management is set to present and speak on Wednesday, September 15th, which should cause a great catalyst and even some cash flowing into the SENS stock. Senseonics has certainly made a name for themselves, and I don't think it's fair to label the SENS stock as penny stocks or meme stocks just because of the future potential that this stock actually offers. According to their last earnings report, they are also doing very well financially. However, they did have a large operating loss, but the revenues were in the millions, and it's continuously growing, which is great news for investors. About 2 months ago, I made a video to make SENS stock investors aware of the devastating option that a company named PHC Holdings had to cancel their contract with Senseonics. To fill you in, just in case you missed that video, PHC Holdings has large businesses backing them, like KKR and Company, ticker symbol KKR. They also own 58% of Mitsui, and they own 22% of Panasonic Corporation. These three companies combined have a market cap of around $120 billion. However, this affects Senseonics because PHC Holdings owns Essentia Diabetes Care, which markets 20% of the world's continuous glucose monitoring systems, and currently Senseonics is directly working with Essentia to market their EverSense XL 180-day system, which is absolutely revolutionary. The problem now arises because the FDA has not officially approved Senseonics' EverSense XL system for the use in the United States, which gives PHC Holdings the option to drop out of their contract with Senseonics. However, this clearly did not happen for good reason, because Senseonics reported revenues of $3.29 million, which is around 13 times higher than their revenues from last year, and $2.86 million of that came from Essentia's marketing. So thanks to PHC Holdings Essentia, that gave Senseonics an 87% boost in revenue, and this is expected to continue to climb. Essentia is not going anywhere, and Senseonics heavily relies on them to market their product so it can increase their revenues. Essentia is already marketing the EverSense XL system around the world because of its 180-day duration, which is absolutely revolutionary. However, the United States, which is a huge portion of the diabetes market, is not being tapped by Senseonics right now. At least, it's not being tapped by their EverSense XL 180-day system. However, Senseonics is getting revenue from the United States. Essentia has exclusive rights to market both Senseonics 90-day and 180-day systems in the United States and around the world. However, the 180-day system seems to be the better seller between the two models due to its longer duration of effectiveness. Senseonics is projected to have revenues of around $13.5 million this year, $35 million worth of revenue in 2022, and up to $200 million worth of revenue by 2025. So based on Senseonics' market cap, the stock currently trades at 126 times 2021 sales, 49 times 2022 sales, and 10 times their 2025 projected sales. So if you would like to hold this stock until 2025 or longer, you are in luck, because paying 10 times is not that bad. However, many financial reporters and analysts think that the stock price will drop to around 2%, which should give you a great buying opportunity. So if you want a good entry price, that's going to be the ideal price to buy this stock at. The article says, and I quote, "Based on the lack of near-term profitability and the almost certain need for a capital raise in 2022 or 2023, meaning that they're going to issue stock, SENS stock remains highly speculative. Based on the company's own revenue projections of only $30 million to $40 million in 2022, a $1.4 billion market cap seems too high." End quote. And for this reason, that's why financial analysts are telling you that $2 a share is a fair price for this stock, because they are comparing the current and projected revenues to the market cap, and the market cap is rather high compared to those revenues. However, if you want to buy now and hold long term, it's not going to matter, because in the long run, you're probably going to be positive, but it is going to matter because it's going to measure how much you're positive by. So your basic options are either wait for a pullback and invest into the stock, or lower your average cost by investing into the stock when it's $2 by waiting for a pullback, or investing now, because one, there's no guarantee that it will come back down to $2, or when it does come down, it could even go lower than $2. However, most financial reporters and analysts do not think that it's going to fall below $2, at least this year. So if your average price for SENS stock is in the $2 zone, you are in the Goldilocks zone. So the chances of you making profit on this stock, both in the short term for swing trades and in the long term if you're a long-term holder, are very, very high. But what do you all think? Comment your average price for SENS stock down below, like this video right now, subscribe for more stock news videos, and I will see you in the next YT video.